Good morning and welcome to The Business Show, your go-to source for money and finance news in 10 minutes or less every day. I'm Andrew Giancola, and today we're covering the fact that Lululemon is struggling to keep customers spending and why the yoga giant is feeling the pinch of inflation and economic worries, and CoreWeave's big debut on the Nasdaq, and what this means for the largest U.S. tech IPO since 2021. And auto stocks are taking a hit after some of the recent tariffs, what that means for some car companies here in the U.S. Now, the Social Security Administration also has some new policy backlash and how their rush rollout is sparking frustration and delays. And there is hotter than expected inflation data that came out and what the latest numbers mean for the Fed and their next move with the broader economy. We've got all that and more. Let's get down to business. All right, so Lululemon is feeling the pinch of inflation and economic uncertainty, with its CEO Calvin McDonald revealing that consumers are cutting back on spending. So their recent customer survey shows that inflation and economic concerns are leading to the reduced spending. And the company is experiencing decreased foot traffic at U.S. stores, suggesting that consumers are tightening their wallets. Now, Lulu expects slower sales growth for the remainder of the year, and shares of Lululemon have fell over 12% in extended trading, reflecting investor worries about the company's future performance. Now, the results highlight how economic concerns are affecting even premium brands like Lululemon, and if Lululemon is feeling the strain, other high-end retail brands could be next. And because of a double-digit stock drop, this suggests that investors are seriously concerned about the company's growth trajectory. So Lululemon for a long time was the hot stock. They're going to need to figure out ways to turn this around, especially with increased competition coming in. So could this be the beginning of broader trouble in the retail sector, or is this something that is just a short-lived issue? We will keep you posted. Now, CoreWeave is making their big debut. Now, CoreWeave, which is a cloud computing company specializing in AI-focused graphics processing units, or GPUs, is officially going public today. Now, CoreWeave is debuting on the Nasdaq under the ticker symbol CRWV. And the company priced its shares at $40 each, below the anticipated range, raising $1.5 billion. Now, despite the lower pricing, CoreWeave's valuation stands at a whopping $19 billion, even with that lower pricing. So this IPO is valued pretty high. Now, this offering marks the largest U.S. tech IPO in nearly 4 years, drawing attention from investors eager for that high-growth AI play. Now, CoreWeave's business model focuses on providing AI-driven cloud computing power, primarily through NVIDIA GPUs. And even with the downsize offering, a $19 billion valuation is nothing to scoff at. Investors are still betting big on AI infrastructure, and the success of this IPO could set the tone for other tech companies considering going public. There are a lot of AI companies out there right now that are considering going public, and they are probably watching what happens here with CoreWeave very, very closely. So this is grabbing headlines, but can it meet the massive expectations from investors? We'll find out. Now, auto stocks are taking a hit today based on President Trump's announcement of the new auto tariffs, and it is sending shockwaves through the auto industry, but not everyone is feeling the pain. Now, President Trump announced a 25% duty on all cars not made in the U.S., targeting major international automakers. And General Motors took the biggest hit, dropping 7%. Ford also saw declines of roughly 4% and 1%, respectively. Now, Tesla, who is less exposed to these new tariffs, ended the day slightly positive after trading up as much as 7% earlier in the session. And Ferrari gained 3% after announcing plans to increase prices on some of its sports car models. Now, the auto industry is bracing for higher costs and potential supply chain disruptions as tariffs kick in. And unlike traditional automakers, Tesla's heavy reliance on domestic production has investors feeling optimistic. So the question then becomes, the auto industry is reeling, but not everyone is losing. How can Tesla and Ferrari stay in the green? We're going to find out, and we will keep watching what happens here. Now, the Social Security Administration is facing fierce criticism for its rushed implementation to the new identity proofing policies. Now, we talked about this last week, how the Social Security Administration has these new policies, and there is a lot of backlash based on this. So after announcing on March 18th that more people will need to visit a Social Security office to claim benefits or change direct deposit information, the agency is now pushing the start date from March 31st to April 14th. Now, the goal for this is to curb benefit fraud with stronger identity proofing purchases. Now, the SSA has moved that policy effective date back after the backlash from advocates, Congress, and the beneficiaries. And individuals applying for SSDI, Medicare, or SSI who can't use the online system can complete their claims over the phone. With agency leadership in flux, the average wait time for the SSA's 800 number has ballooned to over 21 minutes, with nearly half of the calls going unanswered. Now, beneficiaries who can't change their direct deposit information online will need to call or visit an SSA office, potentially leading to even longer delays. The last thing we want to see is an SSA office that takes longer than DMV. Now, the Social Security Administration is under heavy scrutiny. Now, will it fix this issue, or will these new policies just cause us to have to wait way longer if you are someone who takes Social Security? We'll keep you posted. All right, the last story today is there is a hotter than expected inflation report, but what it means for the economy. So the Commerce Department just released fresh economic data, and it's raising some eyebrows across Wall Street because the Personal Consumption Expenditures Price Index, one of the Fed's favorite inflation gauges, came in hotter than expected for February. So core inflation rose 2.8% year over year with a 0.4% monthly increase, and consumer spending for February rose 0.4%, falling short of economists' expectation of 0.5% growth. Now, personal income outperformed expectation, but it wasn't enough to boost consumer spending. So higher than expected inflation could push the Federal Reserve to consider further interest rate hikes, and slower than expected consumer spending may signal weakening demand, which could impact overall economic growth. And investors will be closely watching how the Fed responds to this new data. But honestly, if you are a long-term investor, this is not really that big of a deal. It is a small difference maker overall. A lot of media companies will come out and say that this is a huge, massive deal. To us, this is not a huge deal whatsoever. And this data just adds some short-term complexity, but it is not a huge deal. Listen, thanks again for tuning into The Business Show. If you know someone who will find value in this episode, share it with a family member or a friend. Also, if you enjoyed the show, please take a moment to leave a 5-star rating and review. It helps us reach more people with this message. And don't forget to follow the show on Apple Podcasts, Spotify, or your favorite podcast app. Thanks again for listening, and we will see you on the next episode.